Hi, Shailesh. Thanks for being here with us today. It's
My
really
pleasure,
nice.
Pradnya.
It's really nice to have enablers like you for the MSME ecosystem come and talk with us. Just want to give you a little bit of context, you and the viewers as well, and then I'm going to ask you to do a formal introduction of yourself, right, and about the company you represent, Gromor Finance. So just in terms of context, Shailesh, I'm at Gokhale Institute of Politics and Economics. And what deAsra has done, the deAsra Foundation, is to partner with Gokhale Institute to focus on nano entrepreneurs. But that is all in the context of a center that Gokhale Institute has launched, which is the Center of Excellence for Entrepreneurship and Development. So within that, one of the first things that they will be doing is looking at nano entrepreneurship in partnership with deAsra. So that's how it's set up, and that's why my presence here. And why today I would like to spend this session discussing with you with a focus on small businesses, on nano enterprises, but CEED, as it is called, the Center of Excellence for Entrepreneurship and Economic Development at Gokhale, is a bigger canvas. So there'll be lots of other topics to discuss at a larger canvas as the center moves ahead. Yeah, so that's pretty much the context. I wanted you to talk about yourself and Gromor Finance as an enabler for MSMEs and give our viewers a little bit of background about yourself.
Thanks, Pradnya. First of all, thank you very much for having me. And I think from what you explained, what deAsra Foundation and Gokhale Institute is doing together, I think is very much something we as a country and particularly the small entrepreneur segment needs. So congratulations on the center, and I'm wishing all the best and hopefully collaborate in whichever way possible going forward as well. So quickly about Gromor. So Gromor Finance is a micro business focused, small business focused financial services company. We are an embedded financer, an NBFC, wherein we support small businesses in their growth by providing them working capital solutions without any collateral or it's unsecured lending as it is called. And we primarily work through our embedded finance platform called as Glass, wherein we enable any other B2B platform who is supporting business for various other things, their invoice management or their supply chain management or their inventory management or their payroll management. A lot of these solutions have come about in the ecosystem. So we enable them to also add a financial services layer. Right? And leveraging the same platform, we also work with a lot of nonprofits like deAsra and other nonprofits and social enterprises to make sure that the same platform is leveraged to transmit the capital to the bottom of the pyramid when it comes to the small business ecosystem in India. Right. So that is what we do, and we have been at it from last 5 years. Have worked with close to 1 lakh MSMEs. Have helped them meet their working capital needs by providing various kind of products like term loan, line of credit, revenue-based financing, those variety kind of things. And yeah, hope to continue this journey and impact close to 1 million MSMEs in 2 to 3 years to come.
Wow, excellent. Thank you for being here, Shailesh. So it's great to have you, and it's collaborations like yours that are really going to help the center to meet its goals. So the center is essentially going to be focused on informing and influencing both policy as well as practitioners. And when I say practitioners, it is of course enablers like yourself, like the ASRA, an entrepreneur development organization, others like marketplaces and other academic institutes, industry bodies. So there's a lot of work to be done in terms of policy advocacy and being really the voice of an entrepreneur, especially the small business entrepreneur, because 90% of our economy works there. So you said something very interesting, Shailesh. You said, while you are focused on small businesses, there are various different kinds of small businesses that you're focused on. There's the bottom of the pyramid, there's other micro businesses, there's various other kinds of businesses. So I'm interested in knowing really the landscape of MSMEs that you see that require fintech solutions, because micro today is defined as anything up till 10 crore annual turnover, right, in the new definition. So that's a huge bracket. So what really is this MSME landscape, and where really do you think fintech is required as a means of access to credit for them?
Right. Thanks, Pradnya. You put it right. Uh, First of all, the importance of MSME is not lost on any of us, right? They are the biggest contributor to economy, export, as well as employment generation, most crucially, because that is the biggest problem we as a country have to solve. That when we have a demographic dividend of young youth people, we also need to have avenues to make sure that they have a meaningful livelihood, and MSME is going to play a huge role. So I think that is, I don't have to convince anybody with respect to that. And you rightly said that it's a pretty broad segment when you say MSME. It's micro, small, medium enterprises, and it can go anywhere up to even 250 crore. And as you mentioned, even micro is pretty broad spectrum. But we do see there are a lot of small sections within this broad spectrum, right? And that is continuously evolving and changing the way technology is permeating through how business is done, right? So take example of gig workers, right? Somebody who is into logistics. I mean, you can call them as a entrepreneur, right? They are not a salaried, right? And they are working on a gigs, and their income is totally dependent upon how much work they are able to perform, how are they able to scale, and all that. So they are the business in themselves, right? Or somebody like a pani puri stall or a momo stall, they are also businesses, right? And these nano or a solo entrepreneur businesses and all that, I mean, there is no specific estimate, but the as per the NSO and all that, whatever reports we have, there are close to some 70 million MSMEs. 95% of them are small or micro or nano in space, right? So you can imagine how big that number is, right? And if you have to split them on the revenue basis, you can actually say anyone who is from zero to the 1 to 10 lakh, 10 lakh to 50 lakh, 50 lakh to 1 crore. And their problems are also very different, right? So you cannot really look at them in a traditional sense, where most of our financial services industry, because of their operating model, was only catering to, let's say, medium and large enterprises. And the same policies cannot be applied to this micro and small, right? So there is definite shift is required in how we cater to them, how we understand their needs, and how do we fulfill them. And that is where I think your another question, which is the fintechs and their roles, right? So fintechs, I think, do two things essentially. One is that they are leveraging technology, a contemporary technology, right? Whether it is with respect to data and having a lot of alternate data and running algorithms on top of it, not rely on traditional source of information for underwriting a business. So that's where they are doing a lot of innovations. The second innovations they are doing is that creating a lot of innovative products in themselves, right? Which is, when it comes to business segment, is largely missing. If you think about a business loan or a term loan kind of product, it is actually derived from a salaried personal loan and retrofitted into a business ecosystem. But it is pretty unfair, because business has a like cyclicity, seasonality. Their incomes are not as steady as probably a person getting a salary every month, right? So you can't have a same structure and offer it to them. So fintechs are actually creating a lot of innovative products there. So wherein the MSMEs can get what they want and at the time they want, which is also crucial, right? And at the convenience of use of their mobile phone, right? That is a significant change, another change what they are bringing in, because going to a bank, imagine for a small entrepreneur, is quite intimidating. It is not just the loss of livelihood of a day, but just the experience, the sheer experience, the complexity, which has not changed for many years, is pretty daunting, right? So fintechs are leveraging technology. They are creating a new products, new business models, and they are creating a convenience and broadening and furthering this whole formal credit ecosystem, right? So I think going forward, they have a uh, pretty important role in making sure that the humongous credit gap, as we see in the micro small business segment, which is by any count is close to 20 lakh crore in India, right? And with our ambition of going to a $5 trillion kind of economy, these fintechs are going to play a huge role in collaboration with the traditional financial services ecosystem, of course.
Right, right. No, makes sense. One of the things that comes to mind, Shailesh, that I think we should discuss is during COVID times, the initiative that we ran for nano entrepreneurship. deAsra and Gromor together ran the Sahayata program, which was an innovative blended finance model. I think it's relevant to discuss that, your experiences on that, and then a second question related to that as an innovative model. What was that model? How was it different? And do you think it is replicable?
Yeah, thanks. I'm Pradnya. I think you just so when I was talking about innovation, you brought in a good example of that such a innovation, which is that Project Sahayata, what we have done at the peak of the pandemic. I think just as soon as the lockdown got over in June 2020, we were kind of out there. And I think thanks to deAsra and their collaboration partnership, Dr. Anand Deshpande, you and your team, I think we were able to stitch that program together. And that program not only has helped us reach out to close to 1,000 small businesses, also provide working capital finance to close to a 200 kind of businesses, but it also actually opened up a completely new business model in which this transmission of capital can happen to the lowest of the segment, right? So the program was primarily meant that during lockdown there was no demand, right? Small businesses were suffering. They were at a crossroads where they had to either shut down their businesses in the cities where they are and relocate to their towns and villages for good, which is basically like pushing their life back by a few years, right? So impact was very catastrophic. And that is basically what we together wanted to stem, right? And we wanted to kind of provide them the encouragement, support, and also financial assistance so that they can live through this difficult time and be able to meet their operating expenses, even though they probably have not having any kind of significant revenue. So that is where we created this emergency Kickstarter loan program. And the design also was very innovative, both from a loan product perspective and also the financial facility, which kind of supported this at the back end. So the loan product was such that we will offer them 3 to 4 months kind of working capital for meeting their operational expenses. And it will be done in multiple tranches every month so that they can sustain their cost and continue to, fight this whole pandemic and its after effect. And then we provided them moratorium because we knew that the the impact of pandemic is not a transient. It is going to be little more sustained kind of impact. So they needed little more time to make sure they are back to business. So we provided a moratorium. Then we also subsidized the interest rate compared to the market rate. So we did not want to kind of burden them with the interest cost. So the interest also was subsidized. And then on top of that, we built also a program wherein we actually refunded the entire interest cost to them, right? So it is more like outcome funding based on certain behavioral repayment traits which these businesses were expected to follow. So all in all, very innovative product. It actually was win-win for everyone. All the businesses benefited out of it. I'm very happy to say that majority of businesses could survive, live through that pandemic, and I think still growing, and which was an extremely satisfying part of it. And now coming back to the facility, and this is where you mentioned about blended finance, and I want to
Yeah.
kind of reiterate on the importance of this model in the financial world. So blended finance, so you have, like we discussed, that there is a huge spectrum.
About to explain blended finance. Why don't we
Yeah,
take it from there?
sure, sure. No, I
Sorry.
mean, extremely important emerging kind of concept, and which is becoming popular. And so to explain blended finance, let me tell you why it is very relevant to our ecosystem right now. And like we were discussing, the MSME segment is very broad. There are these micro, nano, solo entrepreneurs uh, who are doing business, making their livelihood, uh, but at the same time, they are very, very vulnerable to any kind of macro changes, right? Pandemic has demonstrated that very clearly,
Yeah.
because they do not have the level of savings uh, which can act as a shock absorber. They do not have a lot of access to credit, right? Because they are bottom of the pyramid, they are considered risky. But at the same time, it is imperative that we have to support them, because it is, helping uh, them make a meaningful livelihood out of it, right? So it is very difficult that a commercial capital, which is judged at a very different parameter with respect to return on equity, return on assets, and even when commercial capital has somebody else in the hierarchy who is expecting a return and all that, and they are very risk conscious, right? And sometimes uh, reaching out to these kind of bottom of the pyramid intermediaries is also very, very cost intensive, right? So both cost and risk, this commercial capital is very conscious about, primarily banks and NBFCs and other institutions. And that is why largely they do not serve this kind of micro, nano businesses. But at the same time, there is also a lot of philanthropy.
Yes. Sorry, Shailesh.
Yeah.
So you were talking about the philanthropists and how they can
Yeah,
contribute.
yeah. So at the same time, there is a lot of philanthropic capital through CSR. There is a law, and 2% of profit needs to be deployed to social welfare activities and stuff like that. So there is a lot of capital which is available. There is a lot of capital which is coming from outside to do a impact kind of work. There are impact investors who are providing patient kind of capital. So now we have to think that how this philanthropic capital can be combined with a commercial capital and create a very kind of optimal model, right? And that is what essentially a blended finance is, right? If you have a X philanthropic capital and it is distributed as a grant, right? You can have only certain amount of beneficiaries, right? But if we can take the same philanthropic capital, use it as
Hmm.
a risk capital,
Okay.
and then attract the commercial capital as a leverage on top of it. It could be 3x, 4x, 5x, right? So you will have a larger pool of capital,
Hmm.
and then deploying it as a formal impact. That is the hypothesis which blended finance has, and it
Okay.
has gained quite a bit of momentum in education, in
Hmm.
livelihood, in climate change, right? And a lot of philanthropic capital is now used as a risk capital so that they can guys come and take risk on these vulnerable bottom of the pyramid sections and
Hmm.
create a very sustainable model, right?
Hmm.
So,
Hmm.
so deAsra, along with deAsra, whatever we did in Sahayata was exactly that.
Okay.
We
Yeah.
had some level of guarantee protection, so our risk was taken care, because at the time of pandemic, the risk perception was very high, and it
Hmm.
was not possible for us to do using our own commercial capital, which attracts a pretty daunting interest in
Yeah.
itself, to do this kind of subsidized loan program. And I think that is where all these coming together, we were able to support these hundreds of micro entrepreneurs, nano entrepreneurs, right? And I think this blended finance is going to be very crucial going forward.
Perfect. Shailesh, so we spoke about some other models as well, grant, returnable grant, etc. So are there other models along with blended finance that you feel should be explored and some innovations built around those as well?
Yeah, so it's not that. So the grant, returnable grant, and then subsidized interest rate, and then probably free market,
Hmm.
interest rate kind of thing. I believe this is a continuum, right?
Okay.
So I think we have all the nuts and bolts or isolated examples of working models already available.
Hmm.
I think what innovation is needed is that how do I create a continuum between these
Hmm.
all four of them? Like for example, let's say if we are doing a grant program, right? Now, how do we leverage technology to capture all the data through monitoring, evaluation, learning kind of exercise, which happens usually with any grant program, and persist that data in a common platform, right? Leverage that data and maybe migrate some of those beneficiaries into returnable grant program, right? And then maybe eventually graduate them to being a part of some subsidized loan have become so sustainable on their own that they become part of your formal credit ecosystem, right? So I think more than creating any new model, I think what we need is that we need to have a big picture around how all of these things can be connected together and have a long-term view around it and have a underlying technology infrastructure uh, uh, and leverage the contemporary technologies which are very easily able to do that, right? And I think that will be a more crucial thing to
Hmm.
do in the coming days.
Right. No, very well explained. I think that sort of brings clarity to what is required, what is out there. You mentioned one very important thing along with technology, and that's data. And I wanted to ask you, while fintech will do all that it will do from a technology and infrastructure angle, what do these small businesses need in terms of data availability and data readiness that will allow fintech to service them better, to make sure that fintech understands them better and then is able to provide them the loans required?
Right. I mean, very important point. This kind of needs a little bit of mindset shift from the entrepreneur's perspective as well. Especially one has to realize that we are part of digital economy now, and data is a new oil, as they say. More than that, I feel data is basically something which can empower you, right? So they have to every small business or nano business or anybody who is doing business, or uh, they have to realize that data is something their strength, right? Data is something which they can leverage for their own benefit, for their own growth, right? There is general reluctance with respect to sharing data and all that. I mean, there are a lot of societal background to it, and of course, there is a trust issues between financial institutes and the demographics at large. I think we have to get over all that. But now, considering the technology is becoming very prevalent in our day-to-day life, and we are generating so much of data, everybody should have a view of our own data and probably almost have to create a kind of a data package for themselves. Whether it is a formalization related data, like you have a Udyog Aadhaar, whether you have a shop and establishment if required, you have a GST registration, you have your business PAN, you have your business current account, that kind of data, or any other kind of financial data where you are doing business digital, you are collecting from customers digitally, you are paying to your employees digitally, you are paying to your vendors digitally, you are paying your, government tax, electricity bill, rental, everything digitally. So you are in the process, you are creating data, and that data you should have a view of how to leverage that data for your own benefit, right? Because essentially in financial services, what we are doing is that we are trading money in exchange of information. So whoever has a richer set of information will tend to benefit, not just in terms of having access to capital, but also in terms of what kind of interest rate they will get,
Hmm.
right? So I think it is very important that we have to teach. So I think very glad that Gokhale Institute is talking about entrepreneurial mindset and entrepreneurial training and all those kind of things. We have to explain the young and new age entrepreneurs who are coming up, saying that they have to look at their own data they generate through their businesses, through their
Hmm.
activities, as a primary requirement and work towards that. Get everything formalized, get as much as possible digitized. There is a stigma around it, but I think which is in the past days, I mean, it was more mainly around tax and tax implications and all those kind of things. But, you know, I think it is important that businesses look and think about top line and not so much. Of course, you have to worry about your bottom line, but don't try to be, you know, penny wise and pound foolish. You know, so that is very important. So most of the and because most of these fintechs, when they are delivering a solution, they are actually leveraging this same data and trying to offer solution at your own convenience, at your own structure, at your own cost, and at the time what you need. And if you don't have data, you are not part of this digital ecosystem. You will lose out on all those benefits what this digital ecosystem holds in store.
Right, right. So the need for digitization, the need for collection of data, having it ready, being formalized, being digitized, are all important from the entrepreneur's perspective to have to enable them to the access to credit,
Yeah,
right?
yeah. I
If
think the data will get generated whether they like it or not. Because if they have to
right,
survive in digital ecosystem one way or the, but I'm also making a point that take that data seriously, right?
hmm,
Make sure that you
hmm,
spend an hour or two in a month just to make sure ki, okay, everything is perfect, everything is right, everything is working,
hmm,
right?
hmm,
So organization of that data is also very important because we are largely seen when we are working with micro and small entrepreneurs, there is a quite a bit of friction when we have to ask for a very basic set of information.
right.
It could be the trust issue, but largely it is because they are not prepared to answer those questions,
Hmm.
right? So they have to be kind of prepared as well. Yeah.
Right. So if we look at the flip side, right, and you know, I wanted to understand, yeah, what Gromor Finance or fintech institutes like yours, um, what kind of support do you need to service the nano and micro group? Because as I understood through this discussion, the cost of service is quite high, right? And therefore, what is it that you would look for either from policymakers or from other enablers to help you in being able to service this group?
Right. So I am very convinced that the traditional model of very closed kind of lending, which wherein there is a lender and there is a borrower, which is more like a bilateral arrangement, it is moving towards the ecosystem-led lending, right? Wherein there will be more than one partners and they will work together and everybody will offer different kind of services to business and the financial services will be one part of it, right? So, like for example, deAsra and us partner, and deAsra was providing most of the business-related competency capacity building, whereas we are providing financial services. But essentially, we are treating that customer together, right? So it is an ecosystem-driven thing. So I think that shift is inevitable. Now, when that shift happens, what needs to happen is that at a policy level, we need to recognize this shift and we need to create models where fintechs and banks and other organizations, non-financial organizations, as well as social enterprises, non-profits, everybody can participate, right? And everybody can exchange their services, right? Everybody can together create a bundle and offer it to customer for their holistic development. Now, to facilitate this, of course, from a RBI regulator perspective, I think there are a lot of sandboxes and all those keeps happening. RBI is a very forward-looking regulator that way, but they also have an onerous job of protecting the risk because financial services is a very connected world. Something somewhere like you can have a dominoes effect, right? So they have to balance between risk to macroeconomy as well as promote these innovations and collaborations between the various organizations and all that. So I think that is where we need to see more and more policies and efforts to have this kind of collaboration done very quickly and smoothly and all that. There are some innovations which are required around the legal side as well, right? Because especially in blended finance, where I'm saying you have a philanthropic and a commercial capital sitting together, sometimes it becomes too overbearing to put a structure together. Put a smaller structure together because the cost doesn't justify, because there is a lot of legal cost, compliance cost, because there is a Section 8 company, Section 25 company, which can take grant but cannot take loan. And, I mean, then there are for-profit companies like ourselves, we cannot take grant. And all those kind of things is sometimes very challenging. So with blended finance becoming popular, I hope the government and the Commerce Ministry, MCA, the Finance Ministry, everybody kind of comes together, including Niti Aayog and all those guys, and create some kind of a inner box model where to put it together is not very expensive, costly, so that it can be done only at a certain scale, right? I think, as I keep saying, India does not have a problem of demand of capital. India does not have a problem of supply as well, right? What we have a problem of having a sustainable, seamless kind of transmission layer where money is kind of trickling down and reaching to somebody who needs it. The current credit ecosystem is very faulty, wherein money is chasing people with money, right? I mean, we saw it in pandemic, how stock market was booming and how the startup valuations were booming, because most of that money which was printed in US or whatever, right, it kind of found its way to richer people, and richer people usually invest in these kind of assets, and that is why you could see that sudden boost in the stock market and all that. But it probably did not meet the intended purpose, because again that transmission channel was not there, right? So I think from a policy, regulation, and all that perspective, one, how do you encourage partnerships, build ecosystems, and how do you enable financial services as a part of that, keeping in mind regulation, risk, and all those aspects, and of course, most importantly, consumer protection, right? Because regulator is primarily concerned about that, right? And the second one is maybe more on the legal side, ease of doing business side, wherein these kind of collaborative collectives can be created, and there are some well-known ratified models which can be leveraged, and such a blended finance facility can be put together really quickly. Yeah.
Wonderful. Thank you so much, Shailesh. I think this was a great discussion, and this can't happen. It's not a one-man show. So we look forward to your collaboration as we work together, bring the ecosystem together, bring policymakers together, and hope to have lots more conversations like this, where we all work together towards making change happen. But looks like a very positive. All your commentary was very positive, and I look forward to working together. We worked together for so long now as part of the Gokhale Institute Center. Also, we get an opportunity to advocate on behalf of the small businesses and work together to help them. So I'm really looking forward and excited to work with you even further on this. Thank you so much for doing this discussion with us, and look forward to having many more conversations like this. Thank you.
Thank you, Pradnya. It was all my pleasure. Like I said, as a last note, I think we have a lot of big problems to solve when it comes to MSME, but at the same time, I'm extremely optimistic, because I see we have Gokhale Institute, deAsra, and there are a ton of other non-profits and policy level intervention which is happening. And I think government is also very, very serious about doing something in this space. So I'm very optimistic that we will make a significant dent, and in that journey, happy to partner and look forward to contribute more. Thank you very much for
Thank you
having
so
me.
much. Thank you,
Yeah, thank
Shailesh.
you. Thanks.
Bye.
Thanks.